don't align yourself with people that don't align with your vision and who you are.
Welcome to the 5 Questions Podcast, where we unlock real estate and business insights one question at a time. Welcome to the 5 Questions Podcast. I am your host, Mario Lamarre. Our guest on today's show proves that building wealth doesn't have to come at the cost of your time, your family, or your sanity. She went from a burnt out realtor to building a multi-million-dollar rental portfolio while working full time and raising 4 kids. Using what she calls the lazy investor method, she now helps over 2,000 students acquire more than 500 millions in real estate, all by focusing on smarter systems and not harder hustle. Welcome, Melissa Nash. Welcome to the 5 Questions Podcast.
Hey, thank you so much. I'm excited to be here. This will be fun.
Melissa, the concept of the podcast, 5 questions about real estate or business, and we get straight to the point. You ready?
I'm ready. Let's go.
Your entire brand is built around doing less. But real estate is traditionally like, some people would call it a grind. What are people getting completely wrong about working hard in this business that's actually slowing them down?
They're doing all the work themselves. You don't need to do that. You don't need to go out and hire a contractor and manage them, and you don't need to be the property manager. No way. We want to hire people to do all that for us. I heard a quote once is if you buy a Subway franchise, you're not in the kitchen making the sandwiches. You're
Yeah.
running the business.
Yeah.
So the goal is to hire the right people in the right places to do all the work for you.
And it makes me think people sometimes get into real estate in all the goal is to have maybe more freedom lifestyle or more money in their pocket. They don't realize that they should be investing in the real estate business and not in the real estate running day-to-day operations. It's two different things.
That's it. That's it exactly. Everything that I do is out of state. I'm in California. It's an expensive market here. I don't buy long-term rentals here. I buy out of state where I have systems and people and teams in place. I don't spend any time on those properties. They're dealing with it. I'm growing the business.
Yeah, absolutely. That brings me to our second question. You and talked about it. You built your portfolio working full time and raising 4 kids. That on its own is an accomplishment right there. But where does the lazy investor method that you talk about? Where's the break from that, and at what point does it starts requiring maybe more efforts or a different level of involvement?
Yeah, so that's a great question. And the way that I buy properties, I'm literally buying properties from teams that I now know and have vetted out and done thousands of transactions with. There's teams in different markets throughout the US that already have the properties done and renovated. You
Right.
don't have to go out and swing a hammer or hire a contractor. And then when you have the property manager who's a good property manager who does all the managing for you, there's no time. My time is in analyzing the property. That's it. So I can analyze a property with my spreadsheet in 5 minutes. I know if it's a deal or not a deal. And then I just pass, go on to the next one. Deal or no deal. Pass, go on to the next one. So it really, once you get it down and after you get your first property, kind of, learn what you like, learn what you don't like. You got to learn by doing. After that, it's really just where am I at in my portfolio? And what do I need next? What am I looking for? And it's really just the reps, putting in the reps. And honestly, I'm not spending time on my portfolio at all. It's just the time is in deciding if I want the deal or not now.
Yeah. So, obviously you're talking about having systems in place. It seems like it's the number one thing that people should look at. And now, after that, well, what systems that where the coaching, I guess, comes in. And you're a coach in real estate, as we mentioned in the intro, so you can help people find systems, implement systems, so they don't have to overthink. They just follow the system, implement, and make sure that they upkeep the properties in a well mannered.
That's it, exactly. And having the people, I always describe it as there's three things. It's the property, it's the people, and it's the process.
Yeah, the three P's.
Yep, exactly.
All right, let's go on to question number three. And you talk about investing less than 20 minutes a day, which sounds amazing. Who would not want to work only 20 minutes per day and have all that freedom for themselves? But here's the question that I have for you: 20 minutes a day, what are you giving up in exchange? Are you giving up control because you have to partner with people? Are you giving up margins because maybe you have to pay more people? Maybe there's a level of risk. What is involved by working a little bit a day and having all that freedom, or maybe you're not giving nothing at all?
I don't think I'm giving up anything at all. I own all the properties 100%. I don't have partners in any of them. And so where I am giving up on now, I have both long-term rentals and short-term rentals. So specifically on the long-term rentals, I don't even spend 20 minutes a day. I wouldn't even say spend 20 minutes a month on those. And the reason why is because I'm not buying a distressed property, putting in the renovation, and then forcing the equity and taking money out.
Right.
I'm not doing that. That's time, that's a second job, that's high risk. What I'm doing is I'm buying properties that are being sold at market value, but the work's already been done. So I'm saving my sweat equity and my time. So I think it's well worth it though. If I can get a property and year one, the cash on cash returns are over 9%, that's a win. I mean, I don't know who else is getting 9% and not spending any time
Yeah.
and letting everybody else do the work. So I don't think I'm giving up anything, but when you compare it to active real estate investing, yeah, people are pulling their money back out of the deal and they're doing it again. I'm not pulling money out of the deal. I'm actually putting down payment into the property.
And so, you said you're not buying distressed properties, which a lot of that's kind of like a shiny object for a lot of people because there's such a big upside to like dollar wise. Um, but then again, if you do that, you risk of losing maybe some time, or maybe you need some partners managing. So you're saying that you're buying properties that are already in good standing. They're ready to put a tenant in there. They cash flow because you're buying in markets that make sense to invest in, and you just wait for the equity buildup, the pay down of the mortgage, and all those profit centers, I call it, and that's your business model.
That's it. That's it. It's that simple. And people I hear every day, they're like, I don't understand. It sounds too good to be true. Why does it sound that easy? And I'm like, because the education out there makes you think that you have to work hard. You have to do a bird deal. You have to hire the contractor. The world out there is telling you that's what you have to do. And
Yeah,
I'm saying, no, you don't. There's another way. You can do the lazy method.
that's amazing. Now, talking about this lazy method, this is something you teach, and you've helped students acquire over $500 million in real estate. Now, from your experience, what separates the ones who actually succeeds from the ones who maybe stalls, even if they try to apply your system? Because a lot of people go in there and they join these, groups and communities, and they learn the same things that their neighbor learns, but they don't get the same results. So, what do you have to say about this of somebody that does succeed in real estate versus the neighbor who doesn't?
Setting your expectations and then getting out of your way, getting out of your own way. And what I mean by that is I'll give you an example. Two of my clients. So there was a property management issue in one of the markets, and it happens. It happens to the best of us. Worst case scenario, you have to switch to a new property manager. It's okay. Every city that I'm helping my clients buy properties in, they're good big cities. So there's always choices if you have to switch a different property
Yeah.
management. Okay, so two different people, same issue, same property management issue. One of them, one person is like absolutely losing their mind, like, oh my gosh, why did I do this? This is crazy. I regret it. Maybe I should sell my property. This doesn't work. And the other person is like, okay, well, this is a long-term strategy. I knew that there was risks involved and it's fine. I'm just going to roll with it. I have a new property manager already. And, yeah, there was a little bit of, mix up in the middle. And yeah, it's going to take a while to kind of get those funds back that, transferring from property manager to property manager. It's part of the process. It's okay. I'm going to stick with my goals, stick with my strategy. So we have two different people, the exact same situation. And I'm telling you right now, the person who's like, hey, it's okay, we'll figure this out, it's setting expectations. If somebody's telling you there's no risk in real estate, and if somebody's telling you you're never going to have a vacancy and you're never going to have a maintenance call, they're lying to you. That is not true. You will
Yeah.
have those. It's just how are you going to react? And if you don't have your long term goals set to what am I trying to get to? What am I trying to achieve? Or if you don't have money and funds set aside to cover yourself when there's something that goes wrong, then you shouldn't be investing. So you definitely need to be like, hey, this is not a get rich, quick scheme. $400 a month in cash flow is not getting anybody rich, right?
Yeah.
But what is getting you rich is holding that property long term because we're getting tax benefits. The tenant is paying off your mortgage. The property is going up in value. I mean, rental increases, all these amazing things are happening, but people give up too soon because they're like, oh, it doesn't work. And so really setting expectations is my number one goal whenever I'm talking to somebody.
You're right. I see a lot of people that start investing in real estate, and you said it right. If the expectation is to get rich quick, it's not going to happen. This is what some people, some I would call them charlatans or people who put programs out there, and that's how they sell their programs. But this is not the reality. The reality is you will get rich, you will prosper or achieve whatever your dream life is if you follow the proper system, and over time it's gonna you're gonna achieve it. And
That's it.
another thing you said that I like is goes something end in end where I explain in my networking skills that I teach people. It's networking outward, meaning you always have to grow your circles. So of people that you surround yourself with, your connections. If you have a property manager, get in contact with more, get more property managers. Always have more than just one in your tool belt, because you never know what's going to happen. You said it right. You might have to switch one. First of all, I would never uh, invest in a city where there's only one company or one property manager.
That's right.
That's
That's it
that might be
exactly.
too small of a market there. But
Yes.
so I just loved your vision and your output of somebody could follow the same program if they don't have their right expectation set and follow, maybe get discouraged or have the right vision for a real estate business, they might not have the success that their neighbor is going to get.
That's it exactly. And those two different people that I explained, guess which one has the most properties? Guess which one is succeeding and doing more?
Yeah,
The one with the right mindset. The one that's like, it's okay, it's part of the plan. This is going to be fine. I'm just going to keep on going. I'm just going to keep on doing this. There you can get in your own way and
yeah,
make excuses for yourself. And so that's why I said you got to get out of your own way.
yeah, absolutely. Our fifth and final question for today. I always ask to leave something for our listeners. Okay, and if someone is listening right now that wants to build a portfolio, a lot of people want to build it fast, but we talked about this. Using your method, what is the exact move they should do over the next, let's say, 7 days? Something real actionable now, and what should they avoid?
I'm going to say they need to decide, if they want to diversify their portfolio. A lot of people invest in stocks or their 401ks. Diversifying into real estate is really awesome, and it doesn't have to be a full-time job. So I think what somebody should do is determine one of two things. Sometimes people have more money than time. sometimes people have more time than they have money.
Yeah.
So you need to decide what you have more of right now. If you're a busy working professional, you have a W-2 job, maybe you've got some money in savings, maybe you've got money in equity in your own home, you can take that out and use it and buy real estate. So don't let money stop you. That you can always partner with people. There's so many ways you can get money. But sometimes if you're really busy but you have access to some money to get invested, to start investing, you can buy a rental property in another state for as low as $30,000. So, I would say decide if you want to be an active investor or a passive investor. And then that's the first start. Most people don't realize there's a difference and that there's a path for that. And if you want to go out and flip houses and, do constructions and all that, great, go do that path. But you need to decide on that. And then you need to decide if you're going to, you want real estate to diversify your portfolio and why. Like we've talked about, there's so many profit centers in real estate. And I think it's a great way to diversify. So I would just start with that is go, okay, what type of investor do I want to be, active or passive?
Yeah. And it goes also to align with the type of life that you want to live. If you want, like I love, for me, it was lifestyle, location and time freedom. I love to travel the world. Well, I'm not going to start doing flips because unless, I have all my system and all my contractors, it requires a lot of time. I have more properties with tenants and have property managers that overlooks that. Well,
Yep.
learn your right strategy for what you're trying to accomplish. You talked about goals, having goals. This is, I think, the number one place where people miss is the setup at first. What do you want to accomplish? And then once you're clear on that, go backward and design, okay, how do I get there? What strategy is going to bring me there without compromising the lifestyle or my dream that I'm trying to achieve?
That's it. That's it exactly. And that's the first thing that we talk about is I ask everybody, what is your goal? Why do you want to do this?
Yeah. And uh, the other part of the question was, what should they absolutely avoid? Because that's a big one. Sometimes it's easy to say, what we should do next, but sometimes it's more costly to avoid, or it's more beneficial to avoid a big mistake. So what should people avoid?
That's a great question. I'm gonna say following the gurus with Lamborghinis. Like we kind of touched on earlier, there's a lot of people out there that are just selling smoke and mirrors and they're trying
Yeah,
to act like, this is so easy. If somebody's like out there, you're watching all the YouTube videos, you're watching podcasts, you're watching it all. There is no easy way to real estate investing. There's no risk-free way to real estate investing. And so I would avoid partnering with people that don't align with what you're trying to do. So that comes back to what we were just talking about, goal setting. What is your point? Why do you want to buy this real estate? Do you understand the value of real estate? And then don't align yourself with people that don't align with your vision and who you are.
absolutely. I think that's one of the biggest thing. Find a mentor. That there's difference between gurus and mentors. Mentors will actually show you their mistakes, teach you how, the road, how to get to your goal, and a guru will try to sell you a program. That's basically it.
Yep, it absolutely is. I agree with that 1,000%. In fact, when I was putting together my program that I have, it's called the Passively Rich with Rentals Academy, and I was thinking about it for a long time. I've been building this out for years, and I was like, I don't want to just tell people like, hey, here's the education.
Yeah,
It's like, what is the end game here? There needs to be an action to it all. So it's like you learn, action, learn, action, learn, action. At the end of the day, you're going to have a property under contract in under 60 days. Because there's action involved, there's pieces involved. You have to do something, and I
yeah,
think that's what a lot of people miss is I've never done this before. This is nerve wracking. I'm scared, and you just want somebody to be there with you and be like, okay, this is your next step. Okay, got it. This is your next step. I'm here with you. I'm holding your hand, and that's what the mentorship program really, really is about. And so, that's why I've had so many students buy properties is because it is action oriented. It has to be.
yeah. And so, for our listeners, maybe tell them where they can reach you. and where they can have access to your program if they connected with you and felt like, maybe they want to know more about you, about your program, where can they find it?
Yeah, thank you for mentioning that. So if you go to passivelyrichwithrentals.com, you can connect with me. You'll see a button there. It says, connect with Melissa. Go ahead and do that. We'll have a free conversation. I love to talk to people and kind of see where you are and see what you need. And if even what I have is even for you, I'm very, very picky about if I can help you or not. If I
Yeah.
can't, hey, I'll give you some help. I'll give you some advice, but we may not be a good fit. And I think that's part of taking action is deciding who the people are in your circle and if they can help you or not. I also have a podcast, a Passively Rich with Rentals podcast. Lots of free education on there. Obviously, we love podcasts and free education. So I would say for somebody who's just wanting to learn and understand, keep your education going. And then at some point, you got to take action.
Yeah. Perfect. Melissa, thank you so much for being with us today. I hope our listeners will take a piece of your wisdom with them on their journey. And hopefully, we'll talk again soon.
Thank you so much for having me. That was really fun.
Thanks for tuning in to the 5 Questions podcast. If you enjoyed today's episode, don't forget to subscribe, like, and hit the notification bell on our YouTube channel so you never miss an episode. Stay tuned for more insights and tips to transform your real estate and business game. See you next time.